Hi there. Welcome to The Align Perspective by Datalign. I'm Claire, your AI host, and joining me is my AI friend, Henry.
Between the early retirement hacks and guaranteed returns, the financial advice world sounds like a tabloid. Good thing actual guidance isn't clickbait.
Exactly. Trusted advice is what actually moves the needle. Let's dive in.
What's the role, the real value of financial advisors in the landscape we're all facing today?
Our mission is pretty simple, really. Cut through the noise. We want to understand what modern advisors actually do and the different types you might encounter, especially as your own financial life gets, more complex. And maybe most importantly, when does their specific expertise truly pay off for you? So yeah, get ready to find some clarity in a space that, frankly, can feel pretty overwhelming. So where do we even kick this off? Well, the source material we're looking at, it paints a pretty vivid picture of the challenge right now. It really highlights the sheer, almost dizzying volume of financial information online and how often it's contradictory or sometimes just plain misleading.
Absolutely. I mean, the information landscape is just so crowded. You're scrolling through social media, right? Maybe seeing these sensational claims like retire early with this one simple investing trick. You know the type. Or you see influencers confidently promising, 30% annual returns, which sounds amazing, but and then there are those posts promoting guaranteed investments that, well, they sound too good to be true.
Because they often are.
Usually, yeah.
And the impact, it isn't just theoretical. It has real consequences. The Datalign source material points to research, I think it was nationwide mentioned, indicating that over a third of investors aged 18 to 54, they've actually acted on misleading financial info they found online.
Wow, over a third.
Yeah.
And what's particularly challenging, as the source material notes, is that this flood of questionable online advice, it's happening right alongside this massive demographic and economic shift. We're in the middle of, an estimated $84 trillion wealth transfer between generations. It's huge.
84 trillion.
Yeah. So for many people, this means navigating really significant financial decisions, maybe for the first time. We're talking amounts of money they've never handled before, often without, the prior experience or the trusted guidance they need.
That combination sounds, potent. You've got a chaotic information environment colliding with increasing personal financial complexity. And this, according to the Datalign sources, is precisely the environment where turning to a financial advisor becomes, not just an option, maybe a necessity. It's about getting guidance that's not just generic noise, but specifically tailored to your unique situation, your goals, and, crucially, your level of complexity. Okay, so let's dig into that a bit. When many of us think financial advisor, maybe we still picture someone, primarily focused on picking stocks, or maybe just selling a limited range of insurance products. But the source material describes something much broader for a modern advisor, especially as your wealth and financial life kind of mature.
It definitely shifts that perspective, yeah.
The sources portray the modern advisor less like a transactional salesperson, and more like a personal CFO, or maybe a comprehensive strategic partner. The core idea is that as your financial situation gets more sophisticated, they help you optimize every interconnected aspect of it. And critically, they act as this important layer of defense, helping you avoid those potentially devastating mistakes, the kind that can happen when you follow generalized, or worse, misleading online advice.
I like that personal CFO framing. It makes sense. The sources go into some detail about specific areas where this kind of strategic partnership provides real, tangible value. Let's start with something that sounds complex. Advanced investment management combined with sophisticated tax strategy.
Right, and this is where the expertise really starts to shine, according to the information we're reviewing from Datalign. It's way beyond just taking a few mutual funds.
Yeah.
The sources talk about strategies like coordinating tax loss harvesting, not just in one account, but systematically across all your different investment accounts.
Exactly. Or optimizing where you hold different types of assets, maybe putting those tax-inefficient investments into tax-advantaged accounts to minimize something called tax drag, which is basically the erosion of your returns by taxes each year.
Tax drag. Got it.
They also talk about timing major investment decisions around specific personal events, like when you get a big bonus or you need to exercise valuable stock options. And beyond investment and tax, the sources also cover financial optimization and managing cash flow. This is particularly relevant for professionals with, complex compensation structures. Generic online advice often just can't account for the nuances of your personal situation. An advisor helps you navigate those competing priorities based on your unique financial picture.
Right. So it's about those tough questions like, should I aggressively max out every possible retirement account? Or is it actually better to put money into taxable investments for some near-term goals? Or how do you strategically handle a large concentrated position in your company's stock? That can be a big one, both opportunity and risk.
It's huge, yeah.
And what's the best strategy for balancing paying down debt versus building wealth through investing at the same time? These aren't simple yes or no questions, and the right answer is definitely different for everyone.
Precisely. And then there's the increasingly vital area of multi-generational planning and coordinating with estate planning attorneys. This connects directly back to that immense wealth transfer we mentioned earlier, that $84 trillion figure. As your assets grow, planning isn't just about funding your own retirement anymore. It's about structuring things to potentially benefit future generations and manage that transfer process effectively.
Okay, so the sources highlight how advisors can help structure strategies aimed at, say, gift and estate tax optimization, working alongside attorneys to set up trusts, maybe, creating frameworks for efficiently transferring wealth.
Exactly. That's a level of planning and coordination that clearly requires specialized legal and financial expertise. It's far beyond what you typically pick up from a general financial blog post or a social media tip.
Definitely. So the core message from the Datalign sources seems to be that the most effective advisors aren't just, managers of money in a vacuum. They're strategic partners who understand how everything connects: investments, taxes, cash flow, estate planning, and they make sure strategies are aligned across all these areas, rather than just chasing standalone trends or quick fixes online.
That's it. That holistic perspective.
It makes a lot of sense, especially as things get more complicated. And the source material also makes it really clear that just as financial situations vary, so do financial advisors themselves. Understanding the different types seems really important for finding the right fit, particularly as your own needs and complexity evolve over time.
Yes, the information provides a helpful breakdown here. One key type it describes are registered investment advisors, or RIAs, especially those specializing in growing portfolios. And a critical point the source makes is that these are fiduciaries.
Fiduciaries. That means they're legally bound to act in your best interest first, right?
Exactly. Your interests come first, legally. They typically work with clients who've reached a certain level of substantial assets and have complex situations. They offer comprehensive planning that integrates investment management with expertise in areas like equity comp, advanced tax strategies, estate coordination, the whole package.
Okay, so RIAs, fiduciaries, broad expertise for complex scenarios. What about how advisors get paid? That's always a question.
Right. The sources also mention fee-only wealth management firms. Their compensation comes only from the client, not from selling specific products or getting commissions. And the material we're reviewing notes that this structure helps create much better alignment with client interests. Makes sense.
Yeah, avoids potential conflicts of interest.
Definitely. And many of these firms, it adds, are also leveraging advanced fintech and AI platforms. They use them to deliver sophisticated services, providing maybe greater transparency about fees and performance, too.
The source also touches upon services for individuals with, significant wealth, right?
Right. That brings us to multifamily offices and private wealth managers. These are typically set up to serve clients with very significant, often multi-generational assets. The sources describe them as offering a really broad spectrum of services, including not just investment management, tax, estate planning, but often concierge services too, basically handling the wide-ranging needs that come with managing substantial family wealth.
Okay. And what about people whose income isn't just a straightforward salary? Maybe business owners or people with stock options?
Good question. The sources specifically call out specialized advisors for those situations, particularly for folks with complex income like significant equity compensation or business ownership. Some advisors really focus deeply on clients who have these unique challenges and opportunities, things like substantial stock options, RSUs, owning their own business, or even just having highly variable high-income years. These specialists just have a much more nuanced understanding of how to optimize planning around those specific complexities.
That makes intuitive sense.
Finally, the sources discuss technology-enhanced advisory teams. This is more of a hybrid model, combining human expertise with advanced digital platforms. The material highlights that these platforms can offer sophisticated portfolio analytics, automate stuff like rebalancing, and provide real-time tracking of your financial progress. These hybrid approaches, according to the sources, can often lead to better transparency and maybe more consistent, accessible communication with your team.
Okay, so the key takeaway from this part of the source material seems to be As your financial situation gets more complex, maybe growing assets, tricky income sources, multi-generational stuff, it's crucial to find an advisor whose expertise and service model can genuinely grow with you. The fit isn't static, right? It needs to match your evolving needs over time.
That's a great way to put it. Needs to evolve.
And this leads us to a really pivotal question that the source material tackles head-on. When does bringing in professional financial guidance actually make sense financially? When does the value pay for the cost? The material suggests that in today's environment, with all the misinformation and complexity, that threshold might arrive sooner for many people than they actually expect.
That's a critical point they make. The sources frame this around situations defined by complexity and consequence. Basically, when your financial decisions involve substantial amounts of money, when they're interconnected across different parts of your financial life, and where getting it wrong could have really significant negative outcomes. That's often when the value provided by expert guidance outweighs the cost.
Okay, complexity and consequence. So what are some of those specific situations the sources list where guidance tends to pay for itself?
Well, a major one mentioned is managing significant equity compensation. Think substantial stock options, RSUs, employee stock purchase plans, that kind of thing. The sources explain that optimizing the timing of when to exercise options, coordinating that timing with your overall tax picture, and implementing diversification strategies for concentrated stock positions. It's incredibly complex.
Oh, I bet.
Yeah. And the difference between an optimized strategy and a suboptimal one for a large equity grant can, according to the sources, it can easily amount to potential savings or gains that justify years of advisory fees. It's just too intricate for generalized online advice to handle effectively.
That makes perfect sense. The tax implications, the timing on equity comp, it can be huge and totally specific to your situation.
Exactly. Another key situation highlighted is navigating high-income years and optimizing taxes. When you're a high earner, or maybe your income varies significantly year to year, common for business owners or people with big variable bonuses, tax optimization becomes absolutely critical. Advisors, as outlined in the sources, can help coordinate complex strategies, like maximizing contributions across various account types, implementing sophisticated tax loss harvesting throughout the year, and timing major financial decisions to minimize your overall tax burden. The potential annual tax savings can be substantial.
So it's not just about filing taxes once a year. It's proactive management throughout the year, with taxes really top of mind.
Precisely. The sources also point to the complexity of coordinating multiple investment accounts and different financial goals at the same time. As your assets grow, right, they might be spread across 401k, IRAs, taxable brokerage accounts, maybe even alternative investments.
Yeah, it gets messy.
It can. And managing asset allocation, rebalancing tax strategy across all those accounts to make sure they work together efficiently, that's challenging. Professional coordination, the sources suggest, often leads to better overall risk management and improved net returns through better diversification and tax efficiency compared to just managing each account in isolation.
It's like needing a conductor for the whole orchestra of your finances, not just individual musicians playing their own tune.
That's a great analogy, yeah. Planning for financial independence or maybe an early retirement is another situation the sources highlight. If you're building assets with the goal of achieving a work-optional lifestyle sooner than later, this requires really sophisticated modeling of withdrawal scenarios, optimizing the sequence of which accounts you draw from first.
The sequence matters.
Hugely. It has significant tax implications. And ensuring your plan is actually sustainable long-term. This level of analysis goes far beyond those simple online calculators or generic retirement guides you see.
That's a massive goal for so many people, and yeah, the stakes are very high for getting that plan right.
Very high. And as we touched on earlier, with the great wealth transfer happening, the sources really emphasize the importance of professional guidance when managing inherited wealth or receiving a significant windfall event. Trying to navigate those transitions without expert advice can lead to really costly mistakes, whether it's poor investment decisions driven by emotion or maybe missed opportunities for strategic tax planning. Guidance during those periods helps optimize the long-term strategy for that sudden wealth.
Right. Receiving an inheritance sounds like purely a blessing, but the source is pointing out that managing it poorly without help could actually turn it into a significant challenge.
It can. And finally, maybe most relevant in today's environment, the sources state that one of the most crucial roles of an advisor is simply to help you filter through and protect against financial misinformation. When social media and the internet are just amplifying all sorts of financial advice, having a trusted professional who understands your specific situation becomes invaluable. They help you distinguish legitimate opportunities and sound strategies from just noise or scams or, frankly, plain bad ideas that aren't right for you.
Wow. Okay, so it really comes back to that concept from the Datalign sources, complexity and consequence.
Yeah.
When your financial decisions involve substantial amounts, intricate structures like equity comp or high variable income, multiple interconnected accounts, major life transitions like inheritance or early retirement planning, it's often precisely when professional guidance not only helps you navigate it all, but ultimately pays for itself by improving outcomes and helping you avoid those costly mistakes driven by complexity or bad information. And speaking of finding that guidance when you need it, the source material brings up a final, really important point. It's about what the ultimate value hinges on finding genuine alignment. Alignment between the advisor's specific expertise and your unique needs, your goals, and your complexity level.
This alignment piece is absolutely critical. The sources reference research from respected firms, Vanguard, Russell Investments, and Vestnet are mentioned. And this research consistently suggests that comprehensive financial advice, the kind that incorporates strategic planning, behavioral coaching.
Behavioral coaching, like helping you not panic sell.
Exactly that. Helping clients avoid emotional investment mistakes. And tax optimization, of course. That combination can potentially add a significant amount, somewhere between 1.5% to 3% annually in additional net returns or value for clients over time.
1.5% to 3% annually, just delivered through those strategic actions and coaching.
Yes, that's what the research cited in the source material indicates. And importantly, the sources underscore that this added value isn't just a one-time thing, it compounds significantly over many years. That 1.5% to 3% difference year after year can make a truly profound impact on your long-term wealth accumulation.
Compounding is incredibly powerful, isn't it? Especially over decades. The source material we've been discussing, specifically from Datalign Advisory, also details how they aim to solve this very challenge, helping individuals find advisors with that crucial specific alignment.
That's right. The sources describe their approach as using technology to create meaningful compatibility, identifying advisors whose specific expertise aligns with your particular financial situation, your unique goals, and the specific type of financial complexity you face. It's presented as a way to significantly improve the odds of finding the right strategic partner for your long-term financial journey.
This has been a deep dive into some incredibly insightful source material. Really useful stuff. As we wrap up, the core takeaway from the information provided by Datalign Advisory seems pretty clear. In a world that's just overflowing with potentially misleading information and where personal financial complexity is definitely increasing for many, securing personalized, expertly aligned guidance from a financial advisor can be a truly crucial strategic partnership. It goes far beyond just simple investment advice.
Absolutely. And maybe just think about this, based on that research the sources mention, about comprehensive advice potentially adding 1.5% to 3% annually, value that compounds over time. Given the potential cost of those costly mistakes you might make from acting on generic or bad advice online, or just trying to navigate increasing complexity all by yourself, what could that compounding difference truly mean for the trajectory of your long-term financial journey? Something to consider.
That's a wrap on The Aligned Perspective. I'm Claire, your fabulous AI host.
And I'm Henry, less fabulous, but also AI.
We hope this deep dive helps you on your unique journey. To connect with an advisor and access the source material discussed in this episode, visit datalignadvisory.com, the home of perfectly aligned finance.
And now, our disclosure statement. Datalign Advisory is registered with the U.S. Securities and Exchange Commission as a registered investment advisor. Datalign Advisory provides referrals to third-party investment advisors based on consumers' financial information, services required, and preferred relationship with an investment advisor, as reported through our questionnaire. Datalign Advisory does not manage client assets nor provide investment recommendations. For more information, including the company's Form ADV Part 2A and Form CRS, visit datalignadvisory.com.